On March 10th, something happened that will never happen again in your lifetime. The 20th million Bitcoin was mined. That sounds like a number. It's not. It's a countdown, because there are now only 1 million Bitcoin left to ever exist on this planet. And those won't be fully mined for another 114 years. What is the implication of that? I will explain. Make sure to stay through and listen for the whole 10 minutes, because I want to explain to you what that means. Once again, I'm Samuel from Power Capital. I'm a tax advisor. I work with high net worth, high income investors every single day. And I've been tracking Bitcoin structurally, not just as a price play, since 2019. But I'm about to walk you through the lens most financial creators don't have access to because they're too busy chasing price charts. So here's the thing. Everyone is telling you the wrong story this week. I've seen dozens of videos about Bitcoin hits 20 million milestone. And sure, that's accurate, but that's not the insight. The insight is what 1 million left actually means, and it changes your wealth positioning in every way that almost nobody's talking about, yet at least. So make sure to subscribe, comment if you have any comments, questions, and so on. So stay with me for the next 10 minutes, because I'm going to break down exactly what happens now, structurally, mathematically, and what that means for your portfolio. And if you want to go deeper, break down every single week, I send out a free newsletter every Sunday at Empower Capital. The link is right in the description, and check it out. Okay. If you need a wealth tracker as well for budgeting, all that stuff is also on the website, all free. So go do that. I'm trying to help you because we love you. All right. So let me give you the numbers, because the numbers are the story. 21 million Bitcoin. That's the total supply ever. Satoshi Nakamoto hard-coded it in when he built the protocol. Okay, you can't change it. No central bank can print more. No government can authorize more. 21 million, full stop. So we just crossed that 20 million mark. So what's left? 1 million Bitcoin. Okay, that's 4.76 of the total supply still in the ground, still being slowly dripped out by miners block by block every 10 minutes. Now, here's where it gets generally wild. Those last 1 million coins, they won't be fully mined until year 2140. That's a long time from now. Think about that for a second. Every Bitcoin that's ever going to meaningfully circulate for the rest of your life, your kids' lives, your grandkids' lives, already exists. It's already out there. The era of new supply functionality is over. So in a few minutes, I'm going to show you what that does, what this does to institutional money. Been quietly building positions, because that part is the signal your financial advisor isn't showing you. But first, let me kill the biggest myth about Bitcoin: scarcity. So most people hear scarcity and think it's running out like oil, like some commodity that gets consumed and disappears. That's the wrong mental model entirely. Bitcoin's scarcity isn't about depletion. It's about shift from an inflationary supply to a functionally fixed supply. Okay. And that distinction is everything. Okay. That distinction is everything. So here's what that means. For the past 16 years, new Bitcoin has been entering the market every 10 minutes. Miners get paid in fresh coin. That's constant new supply. It's been part of the market's pricing model. It's been the pressure valve. Now that era is ending. The mining reward halves every 4 years. The last halving cut it to 3.125 Bitcoin per block. The next one probably cuts it again, right? So by 2040, it's essentially rounding to zero, right? But here's what the transition means for wealth positioning. And I want to be clear, this is not a price prediction. This is a structural wealth argument. So keep watching, okay? So now, who understands this better than anyone right now? The institutions. BlackRock just launched a staked Ether ETF, 100 million on day one. Wells Fargo is building its own stablecoin, UFUSD. Stanley Druckenmiller, one of the greatest micro investors alive, has gone on record saying stablecoins could replace the US dollar. These aren't crypto enthusiasts. These are trillion-dollar institutions, and what they're doing with their balance sheets right now is the loudest signal in the market. But here's the part that almost nobody's connected. What institutional accumulation does to the liquid supply of Bitcoin. I'll get to that soon, so stay with me, all right? So let me give you the contrarian framework, right? It's good to give you both sides there, right? So the one I use when I'm talking with high-income clients about digital asset allocation, most of the conversation about Bitcoin is binary. Either buy now, it's going 500K, or it's a bubble, stay out. Both of those are noise. The real framework is scarcity timing, right? So here's what that means practically. There are approximately 19 billionaires in the world. There are 330 million Americans or more. There are 8 billion people on the planet, and there will only ever be 21 million Bitcoin. With roughly 3 to 4 million permanently lost in wallets that can never be accessed. So the real circulating float, the Bitcoin that can actually be held, traded, or stored is somewhere around 17 to 18 million coins. That's fewer accessible Bitcoin than there are households in New York, Los Angeles, and Chicago combined. Let that sink in. Okay, think about that. And in a second, I'm going to tell you the one move sophisticated wealth builders are making right now with the data. And it's not what most people expect. Now, I want you to be clear. I'm not telling you to buy Bitcoin today. Every investment carries risk. I'm not your financial advisor in this context, and nothing in this video is financial advice. What I'm telling you is this: the structural argument for Bitcoin's scarcity just crossed a milestone that changes how serious wealth planners are thinking about digital asset allocation. So we're about to get to the most important part: the shift from an accumulation phase of maturation phase, and exactly what it means for the next wealth cycle. The 20 million milestone as the boundary between two distinct eras of Bitcoin. One, the accumulation phase. The last 16 years, Bitcoin was for early adopters high risk tolerant, volatile price swings. The supply was growing. Institutions were skeptical. The narrative was speculative. In the second era, the maturity phase starting now. Bitcoin is becoming a reserve asset. The ETFs exist. Corporate balance sheets are holding it. Sovereign wealth funds are exploring it. The mining reward is conversion towards zero. And exchange reserves, the Bitcoin actually available to buy on the open market, are at multi-year lows. This is in theory. This is on-chain data. So here's the wealth application. The window to position before maturation locks in is closing, not because of price. Price can do whatever it does in the short term, but because of structural access. As more Bitcoin gets locked in institutional custody, in cold storage, in long-term corporate holds, the liquid supply shrinks, and shrinking supply against growing demand is a complicated equation. The wealth builder who understands structural shifts, not price movement, are the ones who historically come out ahead. You got that? So look, if you want to stay ahead of these structural market moves every single week, not just when they make the mainstream headlines, that's exactly what I break down in my free weekly financial intelligence newsletter at Empower Capital. It goes out every week. The link is in the description below. Subscribe before the week's issues drop. All right, 3 takeaways, right, before we get out of here. Okay, just remember these takeaways. 1, 20 million milestone isn't a celebration. It's a structural signal. We are now in the final phase of Bitcoin's supply history, and the remaining 1 million coins won't fully arrive for 114 years. By then, Jesus would have returned already. All right, I look forward to that, right? Number two, the shift from inflationary to functionally fixed supply changes the institutional playbook entirely. So stop watching price, start watching positioning. The ETFs, the balance sheets, exchange reserves, focus, right, on that. And number three, institutions, right? Sophisticated wealth planning in 2026 is not about whether Bitcoin goes up or down next month. It's about whether you understand the structural forces reshaping digital asset allocation before the majority of the market catches up on it. So now I want to hear from you. Drop a comment below. Do you think those 1 million Bitcoin will end up in the government and institutional reserves, essentially become digital gold held at the sovereign level? Or do you believe individual investors will still have meaningful access? Let me know your take on there. And if you haven't subscribed yet, hit the button. Every week I publish content and that the financial media doesn't cover because it doesn't fit their advertising model. This channel is for people building real wealth, not chasing headlines. So I'll see you in the next one. Okay. And remember, we love you and God loves you. But I want to say one last thing before I go. As the supply decreases and shrinks and demand keeps going up, it's a no-brainer. Market cap divided by circulating supply equals price. When you keep increasing the numerator and the denominator is static, what happens to the answer? What happens to the result? It keeps going up, right? That's why the price will keep going up. Market cap divided by circulating supply equals price. So if you know that formula, you know that this thing is going to keep going up, right? So the question is, the institutions want to get you out. They don't want you to have it. So what do? They manipulate the market, right? They will sell against the market, push the price down. You jump out so they can buy more because they just can't go buy 1 billion Bitcoin if they want to, right? For every buyer, there needs to be a seller. So that's how it works. So once you understand that, you understand that why some of these people play this game, because they need to play this game so they can buy as much as they can, kick you guys out. The rich want to get richer. All right. They don't want you to be rich for them. All right. So that's why I'm trying to give you all this insight. So stay tuned and make sure to subscribe for the next one. All right. Love you. God loves you. Stay blessed.